When the market's in a correction, you might be tempted to check out and stop following the day-to-day action, but it's very important to stay engaged. So we're going to talk about 2 key reasons to stay engaged during a market correction.
Yeah, I mean, a market correction seems like a place where you just want to stay out, but really the big gains in a market come right after a market correction, so you want to be ready for that, for that opportunity.
That's right. So our first key tip is to build your watch list of top stocks because, as Ed mentioned, you want to keep that watch list fresh because the biggest gains we will see right when the market turns. So as an example, let's take a look at the correction that we saw in the 4th quarter of 2018. Now that looks very ugly, doesn't it?
Yeah, and when you remember, everyone, this was really nasty. It kept on going down and down, really heavy losses. So this is like, well, why even bother? Why not just walk away? Well, because things turned around very fast.
Yes, they did. And we saw so many up weeks in a row after that. And that was the opportunity for a lot of investors to make a lot of profits. So that's why you definitely want to stay engaged, build that watch list because the market will turn around just like it did in the 4th quarter of 2018. And we did end up seeing a follow-through day in early January, and that sparked a big run and big runs for a lot of top growth stocks.
I mean, you can see obviously, when the market is going down, most stocks fall. When the stock market is really rallying sharply, even if you didn't pick the best stocks, you're likely to be going up. And if you pick the best stocks, you're in great shape. But yeah, if you took a look at the market in early 2019, boy, it was just ripping higher, very quickly recapturing the losses from late 2018.
Yes.
And there you go. It seems like, boy, we're never going to come out, never going to come out. But if you just sat out and said, I'm not going to bother, and then you show up in February, well, here we are in February, and you'd be missing out on a lot of the gains from 2019.
Yes, that's right. So the first tip is you want to build that watch list. The second tip is you want to be able to start buying and profiting right when that new uptrend occurs. So let's take a look at a few examples of stocks that were on our watch list during that Q4 2018 correction, starting with Shopify. Now, of course, this is a stock that had fantastic fundamentals, but what really made it stand out during that market correction was that relative strength line.
Yeah, as the correction wore on, the relative strength line continued to improve. And the RS line, that's how a stock performs versus the S&P 500. And so this stock, even though it was coming down in the correction, it was resisting it compared to the general market, especially some of the big growth names. And then when the market came out, boy, it was ready to go. And this was one of the very big winners of last year.
Yeah, that's right. So that chart that you're seeing right there is through, I think, May of last year. So you could just see that explosive move that it made. And it was consolidating during the correction, but that relative strength line was hitting new highs. So you definitely want to be updating this watch list, looking for the leaders in a correction because those are the stocks that are going to blast higher when the uptrend resumes.
And it is important to keep doing it, changing it. In October of 2018, Apple looked like a great stock. It was holding up really well. And then the earnings report came out and it was a big loser the rest of the year. So you have to keep in mind, keep that adjusting. Shopify near the end of the correction was looking great. And boy, when the market turned higher, it was ready to go.
And Chipotle and Coupa are 2 other examples of stocks that were on our radar. But just to put everything together here, you don't want to have FOMO. You want to make sure that you are keeping these stocks on your watch list and be ready to strike right when the new uptrend hits, because if you wait too long, those names could already be too far extended by the time you feel comfortable enough and the whole herd of Wall Street feels comfortable enough to get back into the market.
Yeah, and IBD has all the stock lists and all the stories we're talking about and stocks that are setting up and looking good and taking really good analysis of the market. How is it ready to turn? What's the status? Are we going to have that follow-through day that really confirms that a new uptrend is happening? That's really what IBD provides to investors throughout all of our products, and that's why you should be staying engaged, paying attention to what we're writing and listing, and you're going to really take advantage of it when we do get a new uptrend.
Yes, that's right. We'll be able to give you the confidence and tools you need to get back in at the right time to maximize your profits.